Hello and welcome to the Bitcoin Mentor podcast. I'm delighted to have Jesse Berger join me today. Hi, Jesse. How are you?
I'm doing very well, Jake. How are you?
Yeah, I'm good. We're on other sides of the world. For me, it's like bright and fresh morning start, and for you, already 8:30 at night. So thank you so much for joining us. We've got lots to get through. People who have listened to the show before, they know the format, which is really, you're a Bitcoin mentor. We want to learn all about you. Ideally, we dig into things that aren't necessarily Bitcoin related or seemingly so at the start. And then we'll cycle around to what you just told me offline, becoming a Bitcoin author, which is further along. So Jesse, I'd love to learn, what for you was growing up? Were you particularly interested in some certain subjects? What was life like for you as a teenager?
I mean, life growing up in Canada and life as a teenager for me was great. I went to private school here. I played baseball in the summers. I played basketball in the winters. I went to camp during the summers, going on canoe trips. Good, wholesome sort of childhood and teenagerhood, causing a little trouble in the later years
As you do.
in high school, getting into a little bit of trouble. But I think I had a pretty fortunate upbringing. Great parents. I have a brother. Great family. Everyone's happy and healthy, and life was great here.
Okay, and so as you came out of school, did you go to university and take like further education? And what, like, have you had any passions in particular that you can think back to?
Yeah. So in my
It's such a broad question, I know, Jesse.
n-
Sorry, it's like,
no,
tell me
it's
about your
it's
life. And it's like,
yeah,
shit,
yeah,
where do
no,
I start?
it's okay. I'll tell you this. In my high school yearbook, I put the quote, like in my graduating year, I put the quote, I never let my schooling interfere with my education. I think that was a Mark Twain quote. I put that, right in the high school yearbook as I graduated. So I think I was kind of clued in early on that like a lot of stuff that gets thrown at you and taught to you and told, okay, you got to learn this, you got to know this. I think I sort of intuitively knew that, okay, a lot of this is kind of nonsense. I can skate by. And I think that's kind of how I was as both a high school student and a university student. I went to McGill University, which is in Montreal, for my undergrad. I studied economics and philosophy. I I would say I was attracted to both. And I had this line when I was interviewing for jobs after university. They'd go, "Oh, that's an odd combination. Why did you choose those two?" And I would say, "Well, what's the point of learning about markets and economics if you don't actually think about how they interact?" And it sort of ended up being a good canned one-liner, but turned out, when you bring it back to Bitcoin, that's exactly what I ended up doing with my life, is learning to think about markets and money properly and in a critical way. So yeah, the theme of my life growing up was always, I guess, I was a little bit skeptical, intuitively skeptical of things. I was not, I was a smart student, but not the best student. I could get by. Didn't have, especially in undergrad, I sort of let it slide a little bit because I'm like, I'm barely interested in half the things I'm learning here. It just feels like we're not wasting 4 years, but I wasn't engaged as I could have been. And maybe I should have skipped university. I've never really said that on a podcast, but
Yeah.
maybe I should have gone and traveled and got a job and learned the quote real world a little bit as opposed to schooling, which I was kind of like, okay, this is so. So yeah,
That actually resonates for me, Jesse. So I loved uni because I made some of the best friends of my life, and
yeah,
we were partying all the time. Basically,
yeah,
it was a huge social event for like 3 or 4 years, or
of course,
whatever it was. But from a kind of productivity output perspective, it was completely useless. And it was like, get the piece of paper that gets you in the front door of the job that you think you want, and have a load of fun at the same time. And that's kind of then done its job. And it's funny, isn't it? Like I've learned so much more when I've been interested in a subject that I needed to learn about, or I was just like on the job. If you go to university, okay, fine. Why? Now you've got the internet. Like everything's shifted in many ways. But
absolutely.
I mean, shout
And
out to
there's a
my mates that
difference
I used
between
to live with. It was great fun.
education and schooling, right? As a child growing up, as a teenager, as a young adult, we're always learning, we're always being educated. But school, the sort of institution of school, does it carry out that that learning process, that educational process, maybe not to the degree that it should.
Well, and I think we will see what happens, but it's definitely, from my perspective at least, it's shifting very fast. So you did economics and philosophy, and what kind of thing was the university teaching you? And at the time, it would have been, I'm sure, an experience where you thought you were getting, the best possible education you could be. But fast forward all these years and where we're sat now, like there's another way of doing things, which we'll get to later in the conversation.
Yeah.
But yeah. What were your main takeaways from taking a degree like that?
If I don't have a good answer for that because I was not a very good student. Like,
okay.
I got by, but I was not a good undergrad student, and I'll just leave that at that.
Okay, no, fair enough. And what these conversations are all about is helping us get to know yourself from a perspective of being a Bitcoin mentor. But it's just life journeys, just generally speaking. And so if Bitcoin catches your attention in a major way, that's for a reason. If university didn't catch you in a major way, that's for a reason. So before we fast forward to the kind of the passion that is Bitcoin, we'll get there eventually. When you finish with a degree like that, what kind of industry do you go and work in? What was the profession that you picked up? And what were some of the major skills that you got as a result?
Yeah, I was a little directionless, I would say, coming out of university. I remember my roommate applying for consulting jobs. He also did economics, not philosophy, but economics. And so he was applying for consulting jobs. You come in at sort of an entry level at KPMG or whatever,
Yeah.
or Deloitte or PwC. And he would come back from these interview rounds and he's explaining to me that, oh yeah, I'm really excited about the prospect. I'm going to tell businesses how to run. And I just remember shrugging, going, you don't know anything. You're an undergrad, you're an undergrad student. We're very similar. You studied harder than me. I'll give him that. But
Yeah.
you don't actually know anything about running a business because you don't have a business that you run. And
Yeah.
I just thought it was such an odd thing. I'm like, why is he interviewing for this? And someone might actually hire him for this. So anyway, bringing it back to me, I was kind of critical, skeptical, right, about the formal job and corporate ladder and all that. But obviously I came out of undergrad, I had this degree, and I had to work to, do something with my life. And I would say I sort of fell into retail banking was my first job out of undergrad. I was that first touch point you go to when you go to a bank and you say, okay, I'd like to open a bank account, apply for a credit card. Maybe I need a car loan, a mortgage. I need to do some investments. I'm going to buy some mutual funds for my retirement savings or what have you. So I was that bread and butter financial planner, very, very entry level financial planner, and just pushing all the bank products as my first job out of undergrad.
Wow, interesting. You've kind of been inside the beast in a sense.
Yeah.
What is it like actually being in a bank that is using dollars and debt? So let's do that. So how long did you work in that role for, Jesse? And what were some of the things that you noticed that were like, holy shit, that's crazy? Or equally like, oh, I've learned from that?
So I started there in 2006, in the fall of 2006, which was right before the global financial crisis.
Good timing.
Yeah, great timing. So I like to say I had a bit of a front row seat to the chaos of that. Definitely learned a few things. One of the first lessons that I really took to heart from those years was how to say no to people, right? I had people apply for a loan and I'd have to turn them down. Learning to be firm with someone was a skill set maybe I didn't have at that time. So that was a really interesting one for me. And I would later roll that over to even more difficult no's in subsequent jobs. But yeah, learning that, interacting with people, just sales and service, how to get to understand someone's needs, get to know their personality, how to help them using the tools at my disposal, right? An account manager at a bank, the tools at my disposal were, like I said, bank account, mutual funds, GICs, loans. How can I see what you need? What do I have to offer? And how can I best match those two things up? And getting to know the belly of the beast, like, yes, I'm a front row banker. I wasn't privy to anything too special. However, I did come to understand the global financial crisis is the thing that sort of woke me up, as it did to many people, to the ills of central banking and how fractional reserve banking works, and sent me down all those rabbit holes. But once I clued into that, suddenly I noticed people would come and deposit checks for, welfare checks from the province, the country, whatever it is, government checks. And typically, if someone writes a check, you go and check the bank account. Okay, is there money in the bank account that the check is being drawn from? But when it was the government writing the check, the rule at the bank was just wave it all through. And so I'd see hundreds of accounts from whether it's the city or the province or whatever. It's just drawn down into the negatives, and it's just, nope, just blast it through, blast it through, blast it through. And I'm like, well, shouldn't the money, if it's going to be debited from the city account, shouldn't they have a credit to debit from? And I just found that odd. I started to see those things basically in the wake of the financial crisis, learning about economics, central banking, all that stuff. That's when my ideas about money and, the things that inevitably led me to Bitcoin started to come together. And so that was like my background before I really got into Bitcoin. That wow. Like set the plate for me to be receptive to Bitcoin when it eventually came my way.
It's fascinating when people who are into Bitcoin now used to work in the kind of area that you're talking about. And let's pick that to pieces. It's freaking awesome, to be honest, to get to learn from someone like yourself. It's like how it currently works. Because I feel like sometimes we can be too aggressive with Bitcoin as like advocates of it. And we're talking about the solution too much. It's like, no. Just go back to the problem. What's the problem? So one question I had was, okay, so you've got customers coming in with requests, demands, problems, essentially, like I need to finance this, or I need to, save this, or whatever. And then you've got your suite of products that you can try and match that with. What was some of the most popular combinations then? So like it was bank loans that you did most of, or it was allocating cash into a fund, or what was the bank, like where was the most of the volume being done? And, and then how do they really make money?
Yeah, the thing I became a called a quasi expert at was credit lines for students. Okay. So if they were applying to med school or law school, and the reason I became good at it is because those were the easiest loans to get approved. Doing a mortgage was a little bit more involved in terms of the paperwork because, okay, we got to get evaluation on the house, and there's the broker, there's all these other pieces involved. So it was like more work. But if someone came through the door and it's like, hey, I'm going to law school, the bank thought, great, we want to give them a heap of money because we know law school charges a bunch, and it almost didn't matter what their credit is because the ticket to the law school was the credit, like the acceptance to law school. So if they just gave me a slip of paper, hey, you're accepted to XYZ law school, XYZ med school, great, like just give me some basic info, do an application, they're almost certainly going to approve it. And as a retail banker at the start of my career, we're trying to hit targets for loan issuance, investment issuance. I mean, bank account opening, sure, but those weren't exactly the most important. Like loans is what they really wanted. And so for me, I sort of just, I said, send the people who want these my way because this is great. I'll blow my targets out of the water on this front. If I miss another thing, whatever. But I'll kill it on loan issuance because these are just easy loans for high values. It gets me to my targets every month, like no problem. So yeah, that was sort of
interesting. And so, Jesse, so just to give a case study of that situation, I am 20 years old. I'm in Montreal and I've applied for med school. It's a 5-year degree. It cost me $100,000 a year to go. So it's a $500,000 loan, which is at what interest rate over what period? And the bank itself makes money from it how?
Yeah, so I mean, in Canada, the rates are lower than in the US. So yeah, in the US, it might cost $100,000 a year. In Canada, for med school, for I believe it's a 4-year degree, it might be 25 or 30 a year.
Okay.
So I could do credit lines for $150,000. Which covers tuition plus, a little bit of life expenses for med school. And I think for law school, I forget if the limit was like 80 or 100, but to get those approved, if they were accepted to med school, that's like the collateral as far as the bank was concerned.
Yes. Okay.
And so the bank makes money because they print the money from thin air, right? Whenever a bank issues a loan, that is how they are creating new money and adding to the money supply effectively, right? Because it's, a bit of a misnomer if you think that when you go in for a loan that, oh, Jesse has $100 in deposit at the bank and Jake wants a loan for $90. Well, they're going to take 90 out of Jesse's 100 and give it to Jake, and that's his loan. And then he's going to go use that money. And hopefully it gets paid back, because otherwise Jesse only has the 10 left. It doesn't work like that. If I have 100 on deposit at a bank and you want a loan for 90, my 100 is still credited in my account as the full 100 is there. They give you the 90, you go deposit it. Okay, well, now Jake has a deposit of 90, whether it's at the same bank or a different bank, and they're going to, consider that an asset or on their balance sheet. They can loan against that. It's, they sort of wheel of how money is created in a fractional reserve system. And that's if there's a actual reserve ratio, which in Canada and the US, I think right now, there is no reserve ratio anymore. So technically, they can just issue as many loans as they want with no regard for how many deposits are held on hand. So yeah, they make money by issuing the loan. They get paid interest on the loan. And then hopefully they get paid back more over the course of the loan, plus interest plus principal, than the loans that go bad. Because inevitably, if you issue 10 loans, one goes south, but the interest from the other 9 will earn more than the loss. It's sort of like venture capital.
And when you say a reserve ratio, this is essentially a regulated cap on the total amount of loans a single institution can grant versus deposits on account.
Yeah, sorry, I sort of jumped into that one.
No, that's okay. That's perfect,
novices,
because
maybe.
These are the kind of questions that any potential protégés of yours would want to ask, right? So it's perfect.
Yeah.
So am I right in stating that? So the reserve ratio is essentially a leverage metric that the bank is or isn't allowed to get to, and what you're saying is there isn't one.
Yeah, I forget how many years it's been, but there's technically none anymore. They have certain what are called capital requirements, but in terms of the actual deposits versus the amount of loans they issue, there's no limit. I was on a podcast a few weeks back, and I said to the host, because she was also new to this world, learning about Bitcoin and money, sort of just diving down the rabbit hole herself. And I said to her, if Canada existed today, as you know it, everything is the same. Only exception is there's $0 anywhere in circulation. How do the first dollars come into being? And I asked this to the host, and she said, well, yeah, I don't know. Can you explain it? And I said, okay, so here we go. So the government of Canada says, well, I need to spend money to get money into the economy to start circulating. But I have no money. So where does it come from? Well, I borrow it. So the central bank says, I will loan you that money. Central bank says, okay, government of Canada, here's $100,000. You can go spend it however you need, or 100 million, whatever the number may be. It doesn't matter here. And the government says, okay, here's a bond. We're going to pay you back that $100,000 that you just loaned to us. But a bond typically comes with the coupon, with interest, right? You have to pay back the interest. So if the government borrows $100,000, but they have to pay back $100,000 plus, let's call it 5% interest. So they have to pay back $105,000. Well, how do they pay back $105,000 when they only have $100,000 to begin with? And that is like one of the things people need to understand, that's the wheel of the money system right there. That's the crux of it. The money doesn't exist to pay back all the loans in existence. And also the answer to pay it back, you borrow more. So we're in a system that is dependent on continuous credit or loan expansion.
Wow.
Does that make sense?
Yeah, absolutely. What's important here as well is to decipher the difference between base money and broad money, or narrow and wide, however people want to describe that. But when you see the M2, so the Federal Reserve, and the M2 is the base money supply. So how much money has the central bank printed over time? That figure is different to how much money the retail banks print. So what Jesse's highlighted brilliantly for anyone listening out there is there's almost 2 tiers of money creation. One is the very base layer, which is the government and the central bank playing games. And then above that is then the commercial banking system sitting on top of it that's dealing with the retail customers like you and I on the street, or equally then, companies, etc. And it's so complicated that actually no one really knows how much money's out there. And that's the thing that I find mind-blowing.
And because, we know that Bitcoin is a public ledger. All the whereabouts of every coin are known at all times, right? We can account for the exact location of all 19.5 million coins that are currently outstanding. We know exactly where all of them are, whether or not some of them are movable or who owns them. We don't have all that information, but I know that wallet or address number XYZ123 has 10 Bitcoin and ABC234 has 12 Bitcoin. We know this for sure. With central banking and commercial banks, it's a series of private ledgers that are kind of settling with each other, but no one seems to really know for certain who has what credits or when. They release statements and quarterly figures, and the central banks publish certain things, but it is not at all transparent. And again, Bitcoin is very simple. 21 million. We know where all the coins are. We know exactly how many coins are out there. With central banking, there's a rough range, but it changes, and there's slush funds and who knows what else, derivatives of products and the loans, and we don't really have a firm grasp on exactly what's out there.
Everything we use every day in the economy has a price attached to it, and so that price depicts signal to us as to how much value is involved in the production process and what ingredients have gone into it. But that price is based on the complete lack of understanding as to how many dollars actually exist. So every price you look at is in some ways completely wrong, because it can't be right when you don't know. And another analogy I always like, Jesse, is we didn't realize this because we were born into these systems, right? Fiat currency in its current form, at least 50 years old, if not 100. And it's like a big game of musical chairs that just hasn't stopped. It doesn't work unless the whole game just carries on. And the day that it stops, there's going to be a loser, and no one wants that.
Of course.
Jesse, I mean, maybe you've got some things to riff off there. Go for it.
Well, one of the things you alluded to, I have talked about this. I talked about it a lot, I think, when I sort of first came out publicly as a Bitcoiner, that we took money for granted. I didn't know what money was. It was an assumption, right? I grew up with the Canadian dollar. So the Canadian dollar is money. My parents use Canadian dollars to pay for goods and services. My parents set me up with a bank account when I'm whatever age I was. I
5 years
learned,
old. Yep.
Okay, right? You do the transactions. If I do my chores around the house, I get a couple bucks, I put it in the savings account, and then once in a while I'm going to go out and buy some treats or whatever it's going to be. And that's just what money is. It's everyone uses it. No one seems to really think twice about it. Having to challenge such a deeply ingrained phenomenon, I don't even know what I would call it. It's, just everyone uses
status
it.
quo,
no,
right?
Yeah. How could it be that we all just take this thing for granted when it's so wrong? I just as a thinker, as someone who's, you get interested in this stuff, it's just, wow, it's really eye-opening to see that everyone just carries on with life and no one thinks twice. You want to wring your hands and, grab people by the neck and shake them. Wake up. This is madness. This is, what are we doing here? We're zombies going along. And sorry, I'm going off, on a bit of a rant here. It's just it's such an odd thing once your eyes are open to it. But I understand, because obviously we were grown up in the system, why people don't think about it, because it is what it is. It's like paying taxes, right? It's like death and taxes. Okay.
Jesse, I want to draw back. So you spoke about learning to say no, and you commented that, your early retail banking position helped you begin to get good at that. But then you had further jobs that you improved at it. So just to kind of draw us back to that kind of idea of a chronological story as to what brought us to today. So yeah. You describe well your responsibilities as that kind of front of house or customer facing position as a retail banker. What did you go on to do after that?
So when the financial crisis hit, I spent a couple of years teaching myself economics, basically throwing out what I didn't spend a lot of time studying at university. And which is great, because once I found sort of the Austrian perspective, it's like, oh my God, this makes so much sense. And the way I position it for myself is, in school, I was taught a whole bunch of theory, but the theory couldn't be applied in the real world. And then obviously I come into Austrian economics and okay, now I have not just a theory, but it actually translates in practice. And so, okay, this perspective is interesting because it works, and then you can start to use it in your life. So I went through this process while I was in retail banking. I was just reading, voraciously in between clients while I was there. I became a gold bug as a result because at that time, this was 2008 and 9, basically. It was the best money on the market. It was, right, 5,000-year track record, all that. So became intensely interested in gold, thinking, well, if money's going to fail because dollars are garbage and it's all just hot air, then I should have gold. And that led me, actually, what ended up happening was I helped a retail banking client who, she came into the bank and she wanted to withdraw. She had $5,000. I'm pretty sure it was $5,000. It was like not a huge amount of money in a GIC. A GIC stands for a guaranteed investment certificate. So she had this like guaranteed savings from the bank that earned her 2% or 4% or whatever it was. But it was locked in. So it's, she's supposed to hold it for 2 years and she's not allowed to break that thing. This was I'm not going to call her elderly, but she had a few silver hairs. This was A, not a lot of money, but B, it was her money. Like, it wasn't the bank's money, it's her money, and she needed it. So she came to me and she said, I need this money. And I go, oh, it's locked in. Let me see if I can get my manager to allow me to give it back to you. And the manager's like, oh, no, sir, we're not supposed to do that. And I was scratching my head thinking, A, I know we can override this. This is, what are you doing here? Why are you like fighting this woman over this little amount of money? I worked at one of the busiest branches in Canada at Yonge and Bloor, which is like one of the busiest intersections in the city, in Toronto, which is the biggest city in Canada. And I'm like, why are we quibbling over $5,000? I ended up having to write a letter or an email to my regional vice president, which it was just should have been so unnecessary.
Absurd.
To say, this lady needs $5,000 of her own money. She will forego the interest. You don't even have to pay her the interest. Not that it was going to be a ton of money. She'll forego it. But like, we need to unlock this. I'm trying to do right by the client. So we end up doing it. And this woman she was very grateful to me because I went above and beyond, even though I thought, well, this is just what any normal person should do. I'm not trying to be the gatekeeper of your money, and the bank shouldn't be either. But this woman ended up introducing me to a gentleman who I went on to work for because I helped her. She said, you know what, you should meet my investment advisor. He's a great guy. We ended up having a long chat after I helped her out. And she's like, wow, you sound just like him. You should really meet him. So we connected. A few months later, I left that role. He ended up hiring me to be his associate. And I went on to become an associate investment advisor. So I was working with a basically portfolio manager who had 100 or 120 high net worth households. And I was helping him pick stocks, when to buy and sell, analysis on companies. And in fairness, I didn't know what I was doing when he hired me. It was just, okay, come, like, get started. Let's, we think similarly. We think against the grain a little bit, we're critical, skeptical. Come work for me. And so that's where I ended up jumping to after retail banking, was the investment world. And I say I had to learn how to say no. Or in that role, it wasn't so much how to say no, but how to be firm. Because we had clients, again, wealthy, more powerful clients, more influential clients. The guy I worked with was, I'll call him a little bit of a cowboy. We had some clients who would invest on margin, and that's fine. They knew the risks, but basically what margin is, you have, I'll use a round number again, $100,000 in investments. You can borrow against it up to, let's say, 50%. So the investment house, which is basically a bank, will say, oh, we'll just print $50,000 against your 100 as collateral because it's held at our institution. And so you can now take that 50, invest it. Now you have $150,000 of investment, and you're going to pay, interest on that part of the loan. We did some investments on margin, and I'm sure you've heard the term margin call. So this is where the firmness came in. I'd have to call people who are much more seasoned than me, much more been around the block a few more times than me at this point in my career, because now I'm in my kind of mid-late 20s, and say, oh, hey, Mr. X, this stock that we had a bunch of, it fell off today, and you had drawn down your account on some other things. You have to fund your account, or we're going to have to sell the stock that's down that you don't want to get rid of. And so I'd have to be calling people to say, send us money. And I can tell you, no one wants to get the call to say, A, not only is your portfolio down, but B, if you want to keep what's left in your portfolio, you got to send us more money. There were some difficult conversations in there around that, and it was part of the job. But again, it was also part of my growing process.
Oh, I have so many questions I want to ask about that. As an investment advisor, was there anything that you specialized in? So was it the debt issuance on someone's portfolio, or was it picking particular stocks, or what was something that you really either excelled at or found particularly fascinating?
That's a good question. I don't know that there was anything we excelled at, or that I shouldn't say we, that I excelled at there. That to me, it was just like a stepping stone. It ended up being another sales and service job. I tried to learn, okay, what's a good, what are good investment strategies? How are we positioning ourselves? How are we weighting things, right? I learned a lot, I would say, about risk and benefit, trying to think a few steps ahead of the market. But I think what I really learned at the end of the day was that you can't outsmart the market. You're a fool if you think you can. The guy I worked with, we tried to hit home runs, which I think is probably the wrong approach in investing. It's very rare that you can come upon a thing where you have this information asymmetry that you're really, really strongly convinced there's value here, and there's real good reason to think the market will pick up on that later, that they don't see it now, but that probabilistically it should come into focus later. I think we thought we were better than we were at that. There are a lot of egos in that business.
Ego is a big part of it as well, in the sense it's like,
yeah,
you're pitching, like, let's say someone's worth 50 million bucks. They've made their money somehow, or their family made the money somehow. So to go in and say, by the way, you don't know what you're doing with that. I do. Give it to me. Like that very relationship. Some people aren't very good at admitting they got it wrong.
Yeah, one of the lessons I really took away when I left that job was I would tell people, as much as clients loved us when we made money, they will hate you more than they ever loved you when you lose money.
Wow. Yeah, of course.
And I had basically, I was there for 3 years, and I had, the first year I was there was up, so it was great. We outperformed. We had a fantastic year. The next couple of years, not so much. And so that's when I really clued into that.
Cool. Okay, and so Jesse, let's keep on this journey then. So we definitely want to get to, why did you write a book about Bitcoin? Is there anything in between being that investment advisor and like the genesis point for writing the book that we need to talk through, that you could share, that's of particular importance?
Sure. So after the investment job, I realized, for the exact reason that I just said, that they'll hate you more than they ever loved you when you lose money versus making money, that I didn't want that life or that job or that career. And frankly, I didn't think that most of the guys in that role really knew what they were doing. It was, again, you're sort of throwing darts at the board. You tell yourselves a story. Again, we were like the gold team. Okay, we're buying gold miners. We're pitching the story of gold's going to outperform because money's being debased. But after a couple of years, I felt like a broken record. We were not outperforming. Gold wasn't doing anything. And so I left, and I knew I needed to pivot. I wound up going back to school full time to get my MBA. That was a wonderful experience for me. Unlike undergrad, I came in a man on a mission. I wanted to be engaged. I knew that the classes and the subject matter was going to be more interesting, because again, I've done a few years in the working world. I have this idea that I'm going to change career paths. This is sort of my pivot point. I'm going to network. I'm going to do job applications, and I'm going to see what happens. I went in very open-minded and I would say somewhat aggressive, in the sense that I just said yes to everything. I just said yes to every new experience that came my way. And I basically finished, let's call it, top 3 in my class. I was very much near the top of my class. I had an amazing group of friends, amazing group of peers. I won case competitions. One of the highlights of that time was I was actually in a case competition sponsored by The Economist magazine, where I competed against 30 teams from around the world. I captained the team, and we won not just the competition as determined by the judges, who were, if you know who Raoul Pal and Grant Williams are, Raoul Pal of Real Vision and Grant Williams of the Things That Make You Go newsletter. They were the judges, and I had read their work for years prior. So I was like, oh, I know these guys. I can craft a great narrative and a great story. I didn't even care what the case was going to be. As soon as I found out they were the judges, I turned to my program director. I'm like, Dale, like, we can do this. I can do this. So I came in with a head of steam. I came out with a head of steam because I was right at the end of my student career, went into management consulting, did a stint just for 6 months, basically a bank management consultant. I was like evaluating defaulted commercial loans for a bank, boring project, but ended up skipping to market research and customer experience. And for 2 years, I ran the entire market research program for one of Canada's big insurance companies. So if you ever get those surveys, how do you rate our service on a scale of 1 to 10? Tell us about this product, that product. I ran those surveys Canada-wide, US-wide, and in Asia for one of Canada's biggest insurers, and did all the data collection, data analysis, presented the findings a couple times a year. Very different from what I was doing before. Got to learn a lot about how those surveys work and how they're crafted and why and what data they're trying to collect and how you can generate insights from them. But basically, coming to my book, it was when I was at that job that I discovered Bitcoin again for the second time in my career, because the first time was actually while I was transitioning from retail banker to investment advisor. Mm-hmm. I heard about it at like $1, right? And I didn't buy any. I wanted to, but I was like, oh, I'm an idiot banker. I wouldn't know how to hold this if I tried. And then it goes to $50 and it's okay. I missed the boat, whatever. So as Bitcoin does, it comes back again and again and again. And basically it came back into my life at the tail end of my tenure as this market research consultant, and putting together the understanding of retail banking, fractional reserve banking, gold, and what money is through the Austrian economic lens, and then crafting a narrative that I sort of picked up a little bit with the MBA and you know, data analysis, market research, just, you know, it was like everything came together in this perfect storm where I left the corporate job. I knew I wanted to be in Bitcoin. I just left and wanted to find my own way. I didn't set out to write a book. I say I sort of accidentally wrote a book because when I left my job, I didn't have a sound game plan of what exactly I would do in the Bitcoin world. Tried a few different things, and inevitably I was like, well, I used to work in wealth management. I don't want to manage people's money, but I do think that wealthy people should buy Bitcoin, and all people should buy Bitcoin, but maybe I can make money pitching it to wealthy people. So I created this PowerPoint deck where I was like, okay, I'll explain Bitcoin to them and convince them they should buy Bitcoin. And within a couple of weeks, I had like 85 slides. It was enormous. And it was all text at that point. I didn't even have any images or graphs. And I show it to a friend, and you know, he's flipping through it. He's like, Jesse, you're an idiot. You can't show this to anyone because no one's going to sit here for 5 hours.
Put it in 10 slides.
But you have a great skeleton for a book. So I took the framework of the PowerPoint deck. That was the skeleton that I would end up putting meat on the bones to make the book.
Wow. And there's something, this is a question I wanted to ask from before that's come up brilliantly now. You highlight the fact that you used to work in wealth management. You've now kind of got really close to this thing called Bitcoin because of all these seemingly unrelated events, like, and then boom, it's like the kind of eureka moment that most of us have that have got this close to this thing called Bitcoin. It's like, well, I want to reallocate my money to it. I want to reallocate my time to it. And now I want to try and help other people understand it as well. And it's very much that process of like the student becomes the teacher, but it kind of plays out in all of us. When trying to sell Bitcoin to wealthy people, like what's been a good approach and what have been some of the battle scars from kind of trying to promote Bitcoin to people as part of a wealth management play?
Oh, that's a very good question. For the record, I did not end up pitching it and trying to make some kind of investment fund where I was going to help people buy and take a commission or whatever it was going to be. I hadn't even figured out the business model. It was just this vague idea, and I started working on the PowerPoint before I rounded out the idea. So I didn't do that. But that said, I have networked certainly with high net worth investors and talked a lot about Bitcoin, especially the last few years. And it is remarkable that you can sit with someone and talk to them for hours, and they can look you right in the eye and listen and go, yeah, that makes sense. That makes sense. That makes sense. And then you walk out the door and they're just like, okay. And you never hear from them again. And it's like, okay, well, I know they heard everything I said, and I actually believe that they understood everything I said. And if they understood everything I said, then reason would suggest that they should follow up and want to acquire some or find out how they can go about acquiring some. And almost no one ever does. But it's almost like the off-the-cuff remarks, the sort of the slide backhanded compliments are the things that get people more so, where, you could say, oh yeah, you don't have any Bitcoin, like maybe you should get some just in case, right? That kind of line. Or, well, there's only 21 million coins and there's maybe 50 million millionaires in the world. They can't all have one, and they're probably not even all going to be able to have half of one. So, they obviously the math says they can't have one, but like, they're not all going to even be able to have 0.1. So, maybe just get one. Like, you can afford one. Like, maybe just get one. What's holding you back? It's like almost like those backhanded remarks where you try to make them feel the FOMO is the thing that might trigger people more into doing it. Not to say that I have a particularly high conversion rate up with that, but it catches more attention almost, I'd say. But interestingly, you asked about, the reactions as a Bitcoin advocate. I've been doing this for publicly 4 years now, and a couple of years sort of quietly before that. You ride a roller coaster of, wow, you're lucky. Oh, you're still in that. Okay, maybe you were right. And it's like, okay, you just said maybe I was right. And I'm telling you now that I still think I'm going to be right in 5 years. And I've been the exact same mentality about why the reasons for the last bunch of years. None of those reasons have changed. All the fundamentals have improved. You can say, oh, well, it's 60,000. You told me to buy it at 6,000 and I don't want to do that now. It's like, well, what are you going to do when it's 600,000? The opportunity is still here. The reactions are fascinating because human psychology about it, no smart person likes to think they missed the opportunity, right? So there's maybe a little grudge from some people. It's like they're upset, right? They missed it. Oh, Jesse told me and I didn't listen to him. And human nature just makes you like, that guy, I don't like that guy anymore. It's a weird thing. It's a weird phenomenon because I just honestly want to help people, and I want to help my family and friends and the people in my network and community. Like, I want them to get Bitcoin because I know it's the rising tide that's going to lift all boats, or it feels that way to me.
You even wrote a book. Hello.
I went out of my
Read
way.
my book.
I went out of my way. I gave away a lot of free time and a lot of books to just like, hey, I'm here. I will help you. Just call me, text me. I will help you with whatever aspect you need. And, Bitcoin doesn't sting. And it's just, it's you get the odd person who comes back, and when the success stories come in, I'll tell you, I got a text from someone. They go, oh, I just became a whole coiner. Guy's been stacking for like 2 years. He texts me. He's like, I just got my whole coin. I'm like, yeah, like, that's amazing. Like, good for you. Like proud dad moment. Those make it all worth it. I had another friend who, I've been Bitcoin only for at least as long as the book's been out, a couple years before that. I had a friend who, when FTX happened, we would talk Bitcoin and the other crypto, and I would always tell him, like, hey, it's all nonsense. Like, what, just stack Bitcoin, forget all the other stuff. And, he played around with NFTs because he could. He was having fun with it. But when FTX fell apart, he called me and he's like, Jesse, like, I get it. Like, I get it now. Like, I dumped everything else I had. I lost a bunch of money on some of these other coins, but like, I just dumped it all. I have it all in Bitcoin, and now I'm just buying Bitcoin $20 every week, whatever it was. I'm just accumulating. And he was the one who would later text me and he goes, oh, I finally got my whole coin.
Awesome.
To have those wins is so satisfying, and it definitely makes up for, you have these people who like begrudge you because, oh, you told them and they didn't listen. And it's, it's frustrating.
It's your fault. Yeah.
Somehow it's my fault. Why didn't you tell me? It's like, I literally did everything I could to get you into this and you just didn't want to do it. Like, you have to, at some point, look in the mirror and say, you have to humble yourself before Bitcoin, in effect, right? And be like, okay, I didn't do it then, but the opportunity isn't gone, and I just have to look at it with a longer term view and it's not a get rich quick scheme. It's a don't go poor slowly scheme. I'm seeing everyone around me go poor slowly. Maybe I should start to take this seriously. But that's a hard bullet to bite because, again, you come up, especially wealthy individuals. You come up, you invest in real estate, you invest in stocks, and you have your brokers and your hedge funds. There's this piddly guy telling me about Bitcoin. I can't take this seriously. So the dynamic is very interesting.
How can you take this seriously? It's like, well, actually, here's Jesse. He worked in a retail bank. He was an investment advisor. He did an MBA. He's been Bitcoin only for a number of years. Why? You could very easily have a portfolio of assets in a number of different baskets doing a diversified strategy of blah, 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 and you're not. You do get such a varying range of different reactions, don't you? And two things definitely true. Everyone thinks they're late and everyone wishes they'd bought more.
I was late to Bitcoin. I wanted to buy at $1. It went to 50. And I thought, okay, I missed the boat. And I didn't buy it until 6 years later. It was much higher than the $50 when I started buying. And I thought, okay, I'm late. Maybe there's still some upside. But okay, this is my time. I'm getting in and we'll see how it goes.
Something to hammer home there is Bitcoin, although more expensive in terms of price, from $60 to whatever, 6,000 or whatever the price might have been you got in at later, it was a different thing. So the value to price discrepancy is different. This is a whole nother podcast. As guys that are obviously interested in investing, we could talk through like what is the difference between price and value. And that's a story for another time. But as Bitcoin gets more expensive, its value shifts. And that's why even if you think you're late and you wish you'd bought more, you're buying something different to what was the price 4 years ago, for example. And
you're not just...
that makes it much easier, in my view, to actually make the step and go, okay, I'm buying now, even if the price is supposedly completely different.
And you're not just buying a speculative asset, right? You're joining a network. And, if I were to have tried to buy when I wanted to, when it was $1, there was no cold cards, there was no Sparrow wallets, there was no infrastructure, there was no Bitcoin Twitter, or maybe there was, but it was probably very small. The resources, both in terms of hardware, software, and information, were very scant in like 2010, 2011, right? Like very, very scant, very rare. And even if you found a few things, you would really have to teach yourself and then do it yourself. Maybe there was the odd YouTube tutorial, but it just seems like a sketchy thing on the internet. Fast forward even to when I started it, which was in 2017. The first wallet I had was a Trezor because when I got into this whole space, someone said, "Oh, you should buy like an actual device." So I sort of had my own keys, even with a Trezor from the very beginning, and like that didn't exist in 2011. And so between the devices, the software, and then the writing, the reason I was able to write my book was not only because, okay, there's better hardware and software out there, but people have been thinking about it more. And the reason they've been thinking about it more is because, well, they started maybe in 2011 and okay, the value goes up and suddenly, okay, your net worth goes up and your job looks a lot less important. So you start devoting more time to Bitcoin and you're devoting more time. So you're providing resources. So you're literally providing both information and hardware software, right? All of it is being put back into Bitcoin. And so someone like me could benefit from it. So I benefited from what was available then. And because of that, I was able to contribute. Okay, now I expand on the base that was there in 2017. So when 2020 comes out, okay, now my book is expanding on what's there. I'm giving back because I broke free from my corporate chains. That's the network effect that, well, the more people benefit from Bitcoin, the more they can actually say, oh, well, like it's interesting. I'm passionate about it. I can try to give back now. And as a result, more people get into it. And so the network keeps growing, and that is part of the value proposition, right? And adds value to the network.
Yeah, well said.
It's like this virtuous cycle that just keeps growing and growing.
You're moving from an environment where the incentive misalignment is everywhere to a new network or new environment where incentive alignment is everywhere. And the more you see that, the more it becomes a no-brainer to shift your time and money in that direction. Jesse, it's been a real pleasure to get to know you a bit better. And I mean, I learned so much from these conversations, so thank you. We haven't really touched on Bitcoin Mentor at all, which is not uncommon. But you're signed up as a mentor with Bitcoin Mentor. What's your experience and what has your experience been like with Bitcoin Mentor? And why did you get involved?
So I got involved because I was doing effectively what Bitcoin Mentor was doing, but I was doing it just independently on my own via word of mouth, just trying to help people. Literally, what I call like hand-to-hand combat. Like I would sit down, help you maybe set up a cold card, connect it to Sparrow, practice a transaction, or if you're doing a mobile wallet, whatever it may be, whatever your need is. I'm Canadian. Ben, BTC Sessions, is Canadian. We've obviously crossed paths at different conferences. And Ben was one of the first people actually to interview me when my book came out. He did me the great service of actually reading it before he interviewed me, and he was floored by it and always speaks very highly of it. And I'm very grateful for that. So I've always just kept in touch with him ever since basically my book came out and he first interviewed me. And when I saw that he and Mike co-founded Bitcoin Mentor, I ended up connecting with Mike at the Canadian Bitcoin Conference in Montreal. We talked about the goals and what Bitcoin Mentor is doing. And I thought, well, like I'm already doing this, but it would be great to basically expand. I'm still learning. I have certain things I can do with Bitcoin, but there are certain things I don't know how to do. And I want to continue learning and growing and being better at what I do. And so I thought, oh, well, if I can connect with all the great minds, and I'm already blown away by the talent. We have our meetings, we talk about the different issues and news and events and developments in the world of Bitcoin. Obviously, there's a lot going on, but there are brilliant minds here, certainly much smarter than me, already working at Bitcoin Mentor. So it's been very, very positive so far.
Whatever your problem is, someone within Bitcoin Mentor will be able to solve that. And so, if Jesse's story has resonated with you, then I encourage you to reach out and get in touch and use his services. So a final question then to close us up, Jesse, where can people find you to inquire about what it would be like to be a protege of yours?
They can obviously go to the Bitcoin Mentor webpage, bitcoinmentor.io, and check my profile. And I think they can message me there or book a session with me there and do a free session. On Twitter, I'm at jberjay, Jayberjay, and LinkedIn, just my name, Jesse Berger.
Awesome. Well, Jesse, thank you so much for your time today, and I've loved hearing that story. Thank you.
Thank you.